Hopefully you'll remember this trial balance we created in a couple video ago and specifically used in the last video to create the balance sheet. We are now going to use this same trial balance to create an income statement. A couple things I want to point out. I added a line here for retained earnings, which we talked about when we made the balance sheet. And I'm going to show you in the next video how we close out the account and increase the retained earnings account. And then also here we have the income statement, income and expense items. And I've moved interest expense to the bottom of the expense items. And we'll talk about that specifically as we go through making the income statement. All right, let's move that off screen and let's get started with creating the income statement. So what we have, when we start by putting the company's name, and it is BTab. We're going to put the name of the financial statement, which in this case is the income statement. Now, when the balance sheet was a snapshot or a picture, the income statement is a movie. So it doesn't cover a point in time, it covers a period in time. And so for the label we're going to put on the income statement, it's for the year ending, and specifically we are looking at the year ending in this case. This year ending December 31st, 2013. Now, we can change this label as the circumstances require. It could be, in our case, it is for the year ending. It could be for the month ending. It could be for the quarter ending. If you wanted to have some other period, you could say for the period ending. So that it is flexible, but we need to indicate somehow that it covers some type of continuous period. All right, so the top line in the income statement is the revenues. And because it's the top line item, it is going to have a dollar sign on it. We're then going to have our operating expenses. And those are $4,000. Our supplies expense of $420. And let me go ahead and put brackets around these to indicate that they're negative. We're going to have our insurance expense of $450. We're going to have depreciation expense of $4,167. Now at this point we're going to do a subtotal, and we're going to call this operating income. And the total on this, I believe, if I do the math right, it's 5,963, because the expenses in total here are 9,037. All right, so why do we have this line item here? Operating income is a key element into any income statement. It tells the users of the financial statements, here is how much money this company makes from doing the business it's in. Here's what its operations are, here's its revenue, here's its expenses, here's its income from doing that. It isolates everything else. So this is a really important number for users of financial statements. And one thing it does is it separates out, we don't report interest expense in there. Now, while interest expense is typical, and a lot of companies pay interest when they borrow money, it's not part of the core operations. It's how they finance those operations. So yes, we are going to report the interest expense, but we're going to report it below operating income to arrive at our net income for the company. And in this case, it is the 4,763. We're going to double underline it because we're done, and we're going to put a dollar sign on it just to close it out. So now we've reported to our users of financial statements, here's our operating income, here's how we financed it, or the charges for financing some of that income, and here's our net income. Now, this number right here should be familiar to you, because if we go back and look, it was that same number showed up. We're not on the right one here. Showed up on, we're not on the right one yet. Oh, right here. The 400, this retained earnings that was in the balance sheet right here. See this retained earnings? Let me get on that line. You see this retained earnings right here? That was that 4,763. Okay, that is that same number we have here. That 4,763. Now, how do we get that number? Well, retained earnings, there's a formula here. It's beginning retained earnings. And in our case, it was beginning retained earnings was 0. We're going to add net income. And in this case, it was 4,763. We're going to subtract out dividends paid. We had no dividends paid, so that number is 0. And that's going to arrive at ending retained earnings. And so in this case, it's 4,763. Okay, and that's for year 1. When we went to year 2, when we start off next year, our beginning retained earnings is our ending retained earnings from the prior year. So our beginning retained earnings in next year will be 4,763. And at the end of the year, we'll go through the same process to derive what our ending retained earnings are. We'll look at our net income from year 2, net income from year 2, and we'll look at our dividends from year 2. To provide us with our ending retained earnings at the end of year 2, which then becomes our beginning retained earnings in year 3. So that's how we get that. Now in the last transaction, we're going to do a closing entry, and I'm going to show you how to close out the income statement so we can start year 2 fresh.